Welcome to the Real Estate Niche Show, a show that focuses on top real estate professionals who specialize in different niches of real estate. My name is Ben Kogut. Join me as we dive deep into the professional and personal lives of the experts of the real estate industry. Welcome to the Real Estate Niche Show. I'm your host, Ben Kogut, and today I have Steve Streetman on the show. Steve is a data scientist, a systems engineer, and a commercial real estate investor and exchanger. He's also an avid cryptocurrency investor. His background in cryptography and long career in systems integration and risk assessment, combined with real estate investment expertise, makes him the perfect person to combine cryptocurrency and real estate. On a side note, Steve and I have become friends through our involvement in the National Council of Exchangors, which meets in Vegas about 4 times a year. Steve has written numerous articles for real estate investment magazines and regularly presents at his local real estate investment association. He's also teaching a course, and we're going to talk about that here in a little bit. Steve, thank you so much for taking the time. Welcome to the show. Is there anything I missed in your background that you'd like to share?
That's the main part of it. I think you covered it pretty well, Ben. Thanks for the opportunity to talk with you on this. This is great.
Oh, Steve, it's really my honor. I really admire all the work that you're doing in this area. And so maybe just give us a quick little background on what brought you to where you're at now in your career.
Well, it kind of started way back in college. I created my own major, music modified with mathematics. And so it's that combination of the two where the underlying piece is really analysis. Mm-hmm. So I started off breaking codes and ciphers as a cryptanalyst. And then I got into, sensors with intelligence community, putting sensor data together and then putting other kinds of data together, really became a data scientist. And then at one point I read Rich Dad, Poor Dad. And I was going, boom, why am I not investing instead of trading hours for dollars? And so I started investing in real estate and quickly gravitated to the commercial world as just more interesting to me than the residential side. And I also found the real estate exchanging back, around 2011, I think. And I thought that was the coolest thing since sliced bread. It was just the idea of trading properties like baseball cards is pretty cool.
I totally agree. I love that about the exchanging group. Keep going.
Well, and those kinds of things, the data scientist, the cryptanalysis, the data, the real estate exchanging, I ended up with an opportunity to trade land for cryptocurrency. And it was brought to me by some very venerable exchangers that anyone in the exchange world knows. And so I took it very seriously, looked at it, did my due diligence. Probably would have loved to have done a little bit more due diligence, but I ended up doing the trade. And it's been a very fascinating ride since then, because I've been looking at that intersection, cryptocurrency and real estate. Can you buy them? Can you sell them? But then there's a whole bunch of other things that you can do with cryptocurrency that are applied to real estate, like owning it as a tokenization instead of owning it directly as just a simple fee simple title. And there's a lot of things that are really poised to transform real estate. And after a while, I realized that I was the only person who was looking at all the different things that real estate does with cryptocurrency. Everybody was focused on one little niche. And so I wrote a book, Cryptocurrency and Real Estate, which I think you've read, actually. And that's opened up a whole new world of opportunities for me from people who are interested in both or either. And it's just been a really interesting year and a half of since the book was published. No, I think it's only been a year since the book was published. Yeah.
Incredible. So much to unpack there, Steve. I mean, you found, Rich Dad, Poor Dad, that got you down the world of commercial real estate, which eventually brought you into the world of exchangers and National Council of Exchangors in particular, which, I'm a big fan of as well. And then within that organization, you had an opportunity to exchange one of your pieces of land for some cryptocurrency. I'd be curious, what was your thought process going through that, and what was that like to do a transaction like that? How did you actually transact your first deal? This is so early. I mean, like, I don't know if you've actually ever heard anybody at this point actually transacting something like this, but what was
no.
yeah.
At the time, I had heard of Bitcoin, right? Everybody heard of Bitcoin. Everybody knew, oh, Bitcoin's just for crooks and cyber thieves and stuff like that. But when they made the offer, I took a good look at it. And at the time, this was 2017. This was the year of the ICO, the initial coin offering. So cryptocurrency was exploding way beyond Bitcoin and Ethereum. And there were dozens of money raises. And it seemed like if you put blockchain or anything with cryptocurrency in your name, you could raise $100 million with a white paper, which was crazy. It literally was crazy because most of these things were scams or bad ideas or whatever, just like the dot-com boom in the 90s. But I took a look at the one that I was interested in. It was a barter currency. The idea was to not so much to go and put it on exchanges, but to trade for stuff. And I really liked the idea. And while I was doing my due diligence with the price locked in, you know, it appreciated 30 times over my price.
Oh, wow.
So I felt pretty comfortable, certainly in terms of value, in actually doing the closing. I think I was provided the tokens at 10 cents and they closed at, I think it was like 320 or something by the time.
Oh, wow.
And so I felt, okay, I've got the value here. The question is, and this is the big question with cryptocurrencies, especially anything other than Bitcoin, is liquidity. You know, can you sell them on the market? And there's been challenges with that. So, you know, that's the real, I'll call it the dark underbelly of cryptocurrency, is this idea of liquidity. And then the idea is that anybody can create a cryptocurrency. Some people create them as jokes and then they end up being investments.
Right.
Bitcoin's a good example, right? It was a joke until Elon Musk started standing behind it, and then it became an investment, and there's still nothing behind it. So what do you do?
Right. So what have been some of the biggest lessons you've learned on your journey so far of being involved in crypto and real estate?
That's a really good question. What are the big lessons? So the first big lesson is almost everybody you talk to about cryptocurrency immediately thinks Bitcoin.
Okay.
And there are now 10,000 plus cryptocurrencies out there, and only one of them is Bitcoin. Maybe two of them if you count Bitcoin Cash. So what's really happening, saying cryptocurrency is kind of like saying website. You know, cryptocurrency is really the internet of transactions. And there's lots of different ways to do transactions, lots of different kinds of transactions. And there are transactions that are valid and some that are scams and all kinds of things. So if you think of it like a website, well, I'm going to go to the website. You know, websites have different purposes. They have different uses. So some of them promote a company. Utility tokens promote a company. Some of them allow you to shop. You know, some exchanges allow you to shop. I mean, there's a whole bunch of different things out there. So I resist people lumping everything in under Bitcoin. And there's all kinds of things. And of course, NFTs are really hot, non-fungible tokens. And they really represent the ownership or some rights to something. And those have gotten really hot. But again, there's a whole range of things, everything from total scams to the potential of putting real estate on the blockchain, real estate title on the blockchain. There's an auction tomorrow, actually, the very first auction of a US property as an NFT. It's happening in Florida, and a company called Propy.com is doing it. So this is in February of 2022, and I understand that it'll be showing later. So by the time this actually airs, that auction will be way over. But there's all kinds of things going on. You can even own property now. There was a hotel in Aspen, the St. Regis, that was tokenized. So they created what was essentially a syndication, a real estate syndication. Only the ownership in the syndication was represented as crypto tokens. And so people owned cryptocurrency that was backed by ownership in the St. Regis Hotel. Really cool. I'm working with a guy right now to build a whole platform for making that as simple and easy to do as a syndication.
So that's definitely a topic that's near and dear to my heart. I have heard about the gentleman that raised capital by issuing the Aspen coin. And
Mhm.
I felt like there were two, at least two, maybe three major benefits to that. Number one, that it created an opportunity for the investors to be able to sell all or part of their holdings, possibly on a secondary market. And so it also offered, if you and I wanted to go and own a piece of the Aspen Hotel, even though that deal's already closed, we have an opportunity to potentially go and do that after the fact, which, if somebody wants to get into one of my H2H syndications and we've already closed it out, it's a done deal. No one can get in, and frankly, no one can get out, at least not easily. And so I really like that whole concept about, that possibility. And so let's take that a little bit further, Steve. Like
Sure.
where do you see that going next? And have there been any other case studies like the St. Regis that have actually transacted yet?
There are about, I don't know all of them because it's fragmented in the market space. There's more than one tokenization platform.
Mhm.
I think there were roughly 13 the last time I checked on the solid block platform, which is where the St. Regis was. And I know there's, a handful on Securitize, and there's a handful on Stobox, and there's several others that are doing those sorts of things. And you're absolutely right. The biggest advantage is it gives your investors liquidity. So that's, the two biggest downsides of a syndication are, your money's gone for 3 to 5 to 7 to 10 years, and you don't
Mhm.
have any control over when you get that back.
Right.
And then that is really the biggest downside to a syndication. With a tokenization, obeying all the SEC regulations, I think it's usually after a year holding period. That's what I've typically heard. Though I'm not an accountant, not a securities attorney, won't give advice. You should check with your own guy. But after a year, it can go on a secondary market. And cryptocurrency makes it really easy to have a secondary market. So
Because of smart
liquidity,
contracts or something else?
well, a security token offering is what it's called,
Mhm.
and you have smart contracts that underlie it, and the smart contracts can be configured actually to automatically enforce not only the SEC regulations, but many of them will enforce the regulations of the top 50 investment countries as well. So you're simultaneously globally enforcing securities regulations. And
Mhm.
it actually is enforced in the contract, in the token. You can't sell the token and disobey those rules, which I would think that the securities regulators would love that, because now you can't even accidentally do it, right? You're on purpose. And you're right, liquidity is the biggest piece. But the other thing you have to remember, part of the reason for the market value of real estate is the illiquidity of the real estate. So
Yeah.
you have an illiquidity penalty. And if you sell in a foreclosure sale, you expect to get less money because you have restrictions on the time of the sale, and there's all kinds of things. So you expect a 10 to 20% penalty on your purchase price when you have to do
Mhm.
that. Well, if you get into a place where you have total liquidity on the property for any fraction of what you have, the liquidity and market price goes away. And the estimate is that the value of the real estate will go up 10 to 20%. So you could increase the value by putting it on this secondary market as well. And
So
just say
let's
no for your HDH guys, right?
yeah.
You could convert your existing syndications to a tokenization. It depends on exactly how your operating agreement is written, but and you might need your investors' permission,
Mhm.
right? I don't know exactly how things are written or what you have control of, what you don't, but you could conceivably actually convert yours to tokenizations and put your investors, if they've already held it for a year, they could conceivably have almost immediate liquidity on their investments on a secondary market. Talk to you about that after the show if you like.
Yeah, that definitely an intriguing thought process. Let's not talk anything specific about H2H at the
Sure.
moment, but I would like to, since this is my show, I would like to throw sort of an idea at me that maybe someone's going to steal, maybe they won't. But the idea that I thought would be for somebody to go and look to raise capital to buy, let's just say something real simple, like a brand new Amazon warehouse.
Mm-hmm.
Let's assume it has a 20-year lease. I think that at least is something you can assume. And everyone knows Amazon and their credit is incredible. And so I feel like it would be a great idea to go and tokenize, aka raise capital through issuing a the Streetman Amazon coin, whatever you want to call it. And then it would allow people to, be able to get in and get out. Let's say it's probably going to trade at like a 3 cap or something like that. Something ridiculous, but at least like the investors, could get it. We could all argue, at least I would argue, maybe it's arguable, that it's probably better credit than maybe a U.S. Treasury, roughly. I don't know. At least the returns would
maybe
be
today, who knows?
debatable, fair enough. But at least like, you can get a much better return on an Amazon 3 cap than a 20-year U.S. Treasury, or however you want to put it. I don't know. So like, I feel like that would be like a really nice low-hanging fruit for somebody to go and figure out how to pull that off. And then eventually that starts to get into, I don't know, lower credit tenants, but same kind of ideas. And then eventually there's going to be the secondary market where anybody can go on there at any point and be like, you know what, I have some money, and instead of parking it in a treasury or at my bank or wherever at a bond or whatever, I'm going to park it by buying some of this cryptocurrency that is backed by an Amazon lease or whatever it is. And then, you'll probably get a better yield on that money, assuming there might be some sort of dividend or some sort of benefit to doing that. And then you can get out, after a finite amount of time. So what's your thought on that whole idea here that I'm sort of expressing?
Well, I mean, it's a great idea. Certainly, essentially tokenizing a property like that, your investors would get cash flow, just the same cash flow they would get if you did a syndication on the property. So tokenization looks almost identical to a syndication, only you really have the secondary market. So there's some upside. There's no real downside. I mean, you can always.
So like, if I wanted to actually be serious about taking this idea forward, what would be the steps? Or if somebody in the audience was like, you know what, I'd love to go out and buy something in my community, and I'd like to do it by issuing a cryptocurrency or whatever. What are the practical steps that somebody would need to do that?
Okay, so the steps today, and then the steps in a few months, because I'm working with a guy to release a platform where we're going to make this really easy to do.
Let's go ahead and move forward, because this isn't even coming out, so this is a few months out.
So let's suppose that we're a few months from now. We have our platform released. You'd come to us, and we would help you work through the securities documents, making sure the securities documents have all the stuff that's necessary for the crypto. Right? We'll have that boilerplated. We may be able to provide you an LLC, so you don't have to generate your own LLC. You more or less say you want to do it. There will be some fees. There's going to be some fees to put anything together. So whether you wanted to buy a property or even tokenize a property that you already had, so that you could sell off pieces of your equity and have more flexibility. So essentially, you come to us, we'll help you issue the security token, and at whatever point is legally appropriate, that would go into a secondary market. And our focus
after a year, right?
Well, if you were converting an existing syndication, it might be less time. Okay. If you have your own property and you've owned your property for a while, I'm not sure what the answer to that one is. You still might have to hold it for a year. You might not. A new syndication, we're doing a purchase. Yeah, you probably have to hold it for a year.
Let's assume new.
Yeah. And so you hold it for a year. Now it goes in the secondary market. Now think of the secondary market. It's like we're building a stock market for real estate properties.
Yes.
Okay. Right. So with the stock market, you can go in and you can buy $100 worth of Apple, and you can buy $200 worth of Microsoft, and you can sell Apple for, for IBM or whatever you want to do. Right. You can buy and trade, and you're usually buying and trading with cash. On our platform, you can do the same thing. You can buy or sell and trade with cash. You can buy $100 worth of the St. Regis. If it were on our platform, you could buy, $300 worth of multifamily and $200 worth of self-storage and, $1,000 worth of triple net Amazon. So you think about real estate differently now. You have all this high quality real estate and you get the same kinds of things with stocks. What's the diversity in my portfolio? Do I want to be exposed to different geographies? Do I want to be exposed to different industry types and different credit tenant types? Exactly.
Right.
So, which has all kinds of implications for what real estate brokers might be doing in the future. But
and so when people buy into all these different stocks or different, it's just backed by commercial real estate, basically, is what we're saying, or anything for that matter.
Yeah.
Are you issuing a new currencies for people to be able to trade on this, or is it going to be in dollars or Bitcoin or something in between?
Each property has its own crypto token.
Okay.
Right. So the syndication has a crypto token. So it would be Amazon coin or multifamily coin, or probably even put the address in it. Right.
123 Main Street coin.
Exactly. And then what we'll have is a utility token, which acts as sort of an intermediate value. So if you wanted to sell one property, you weren't sure which other property you wanted to buy, you could take that out and hold it in our utility token until you were ready to come into another token. And the utility token would act just like any sort of money on our platform. And then you'd be able to trade our utility token outside as well. And it wouldn't be just our platform. There's other exchanges where security tokens can be traded. You have to be a little careful. It can't happen on just any exchange because the folks running the exchange have to be properly licensed. But
is this in existence yet? This utility coin that you're talking about?
It'll be rolled out with our platform. So
got it. Can you talk about what it is in case anybody wanted to go, be early and buy it? You heard it here first on the Real Estate Niche Show.
I don't think we've named it yet.
Okay.
Our company is going to be retokens.com. But don't go looking for a website yet, or maybe you can by the time this airs, actually. So retokens.com should be the place to go. And you can find all the information you want there. We're also putting out a lot of education because we understand this is a new concept. And not only do the people who might want to tokenize their properties need to understand what are the limitations, what are the advantages, what are the process, but the people who might just want to invest in small pieces of really nice, large pieces of real estate, the investors will have some education that they'll need as well. So it's a really cool project that we're working through. So
it sounds incredible, Steve. Really, and let me be the first to publicly say that I'm in. If there's anything I can do to help you on this journey, sure. I have a lot of resources and contacts and people that are very involved in for a long time, frankly, in the cryptocurrency world. And I think they'd also be interested in this.
Yeah.
So bravo to you for pioneering this. I think that it is incredibly exciting. Like 1, 2, 5, 10 years from now, when this is actually, sheesh, it's the world's, the sky's the limit. Let me ask you one more quick question. Like, sure. I feel like you could take this even further and we're real estate guys, but couldn't you do this with like anything, with insurance policies, with casinos, with anything really, right?
Anything you can have fractional ownership of can be an asset backing a security. In fact, I have some guys who are asking me to create a cryptocurrency backed by carbon credits, which is a really intriguing idea because carbon credits are almost like money. I mean, they end up being tax offsets, especially in places where there are cap and trade regimes, like in Europe and in a lot of other, almost everywhere but the U.S. really, and even in the U.S. there's 4 states that do it. So that's an interesting idea because you could conceivably have effectively a currency that's backed by a natural resource, which I think is really interesting.
Amazing.
Yeah.
Amazing. Well, go ahead.
But and there's a lot of people who are talking about owning real estate on the blockchain using non-fungible tokens. And NFTs.
That's that auction you were just talking about.
Yeah. And that is, NFTs are the hottest thing in cryptocurrency in the past year. And so
I hear it all the time. I just can't figure it out. I feel like, I'm guessing a percentage of it has utility and is legit, but my gut says that 90+% of it is just a scam, and I don't know how to tell the difference.
well, so there are different people who believe different things. I'm not a particular believer in the digital artwork because, as they point out, you can do right-click save, and you have
Yeah.
a completely original copy of the digital artwork. The only thing your
Yeah.
NFT gives you really is sort of pride of ownership. Now, with music, there may be some other things. You might actually get some of the royalties from the song.
Mm-hmm.
And
Yeah.
if that's in the rights, which needs to be in the smart contract that underlies the NFT, if that's in the rights, then maybe there's some value there.
Sure.
But real estate on the blockchain is a different thing. Think of it now as provenance, right? Once you actually know who owns something, you can prove that with the underlying documentation, and that gets onto a blockchain. From there on, the provenance is immutable. You really know exactly who owns everything. So if you had real estate title on the blockchain as an NFT, and you could prove that that tied back right to the actual title, then from that point forward, every person who owns that NFT, that those transactions are immutable, they're recorded, they can't be changed, they can't be reversed. So there's a lot of things that could be beneficial by doing that. There's still some problems to solve, as far as I can tell, because there's multiple blockchains, and you could put an NFT on different blockchains. They don't really check each other out. And until you have a way of proving that this is the blockchain that the NFT should be on, you may have more of an issue. But there's pretty smart people out there, and I think that will get solved.
So let me see if I got this right. Talking about title
Mm-hmm.
and using NFT as basically like you have an actual real old school title policy, and then at some point there's providence, and then from that point forward is the new way to do title. And so that's that part right there where there's going to have to be massive buy-in. There's going to be this archaic industry that's going to fight it tooth and nail, I'm assuming, unless
Right.
they're going to, that's probably going to be the hardest part, is the, government regulations and bureaucracy turning their head and saying, hey, maybe it's time we should modernize the way that title is transacted. But that is a massive industry
But
that I'm sure.
You say that. There are a couple of countries that are already working to put their title on the blockchain. I think Estonia and Georgia are doing that.
Mm-hmm.
I think it was Zimbabwe. They started putting some of their title on the blockchain, and the value of the real estate where the title was on the blockchain went up 10%, just because it's a fairly corrupt country. And if your title's not on the blockchain, it's pretty easy to have it stolen from you by the authorities. Once it's in the blockchain, that's much harder. And so there's more value to the real estate. So it wouldn't surprise me if it somehow gets on a blockchain. The real question is whether it's publicly maintained or whether it's maintained, say, by the individual governments, which still gives them the ability to go in and take it away from you if they decide they want to take it away from you.
Sure.
It'd be interesting to see how it happens.
Well, that is a fascinating conversation. I cannot wait to see where that all heads in this industry. And congratulations to you on all the success that you're having in this. And just know that I'm a big fan about what you guys are up to. And I want to jump on that train as well, because I know that there's a future in crypto, and I know I'm a real estate guy. So, but anyways, we're gonna start winding things down a little bit, Steve. So there are those 3 questions I just love to ask people. The first one is, personally or professionally, how do you like to invest in yourself?
Well, I read voraciously. I'm not too much of a video guy. I'll watch videos occasionally, but I'd rather have the transcript of the video because I can go through that in about 10% of the time. So I read all the time, and I think about things, and I try to talk to people who know what they're doing. So I take occasional classes as well, just like I think everybody does. But my biggest way of investing in myself in terms of improving my professional development is to read.
Wonderful. And how do you like to invest in the community?
Well, I think you always have to give back. You always have to be trying to help out the community. I'm working with a project now to do 3D printing of houses. And
is that Icon or something else?
It's not, probably not Icon. We're looking at Mudbots, and we're looking at Winsun, and we're looking at Cobod. And the idea of doing that with maybe some sort of a biomaterial, sort of a hempcrete type of material, I think there's some real potential for really improving the community there. And the group that I'm working with is a charitable trust. And so we expect to be not just trying to build affordable houses, but trying to help people into the houses as well by moving some of the profits there. So I think we'll be doing that in addition for the community.
That's amazing. And how do you define the word success?
For me, it's been control of time and space. I like to be where I want to be and doing what I want to be able to do. And I like to work on things that interest me. And I've really been blessed throughout my career. I mean, I started off working on stuff that was interesting. I moved to other jobs that were interesting. I feel like I've always been able to work on interesting problems. And now I have even more control over it. You know, I have people pursuing me. I had 4 offers of like executive positions in January for different companies and related to this stuff. And so I get to work on things that are really interesting to me, and I love to be able to do it from anywhere. You know, I was working remotely before COVID, and so COVID didn't change a whole lot for me then, except a lot of the travel went away. But you know, I spent 3 weeks in Venice a couple of years ago, and tour in the morning, and work a little bit in the afternoon, and tour more in the evening, and that worked out really great. I spent 3 weeks in Paris the next year, and I love to go off to a new place and kind of live like a local, but still be able to get good work done, because work doesn't just feel like work, because it's always an interesting problem.
Nice. That's that all sounds amazing. That sounds very successful. Awesome. Well, Steve, thank you so much again for taking the time and sharing that wisdom with us here on the Real Estate Niche Show. If somebody wanted to get a hold of you, what would be the best way for them to do that?
Well, I do have a website where you can get to my book or my course. That's cryptorebook.com. That's pretty easy to get to. And then for me, email is, I check email all the time. It's probably better for me than text, because I can file it, I can get back to it. And my email is steve@streetsmartinvestments with an S, LLC.com. I know it's a really long email address, but if you go to cryptoroebook.com, you can find me there. And if you actually buy the book, the email address is in the book as well. So,
perfect. Well, we'll put all that in the show notes as well. And thanks again for being here. And thanks everybody for listening to Steve Streetman.
Thanks, Ben. I appreciate the time.
My pleasure.
Thanks for listening to another episode of the Real Estate Niche Show. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To catch all the latest from me or the show, you can follow me on Instagram @BenKogut and @The Real Estate Niche Show. Thanks again, and I'll see you next time.